Welcome to this COVID-19 update from Your Future Strategy. Hi, my name's Gareth Croy. I'm the Managing Director here at Your Future Strategy. I'm also a qualified financial planner, accountant, mortgage broker, and the real estate licensee. So using these qualifications and skills, I've put together this presentation today to help you understand what options or assistance is available through the government packages that have been announced over the last couple of weeks. I'm hoping that with this information, you'll be able to put together your own personalised survival plan or strategy to get through the next few months as we tackle this crisis. We're always here to help, and so if you need some assistance with understanding how some of these initiatives would apply to you, please feel free to reach out to us. That's what we're here to do, to help you. The first area of assistance that we will look at is the cash flow options for cash flow coming in. And the first one is the job seeker payment. This is for anyone that's been made redundant or had their employment terminated or is seeking employment. Normally this is on a sliding scale, depending also on the income of your partner. During this time, the government also announced a supplementary $550 per fortnight as a coronavirus supplement for 6 months. Unlike in usual times, the government has also waived the asset test and reduced the waiting period to nothing. This job seeker payment is available to anyone aged between 22 and pension age. For anyone younger than that, they have the youth payment that's available to them. We also have now the JobKeeper payment, which is currently within government today, working through the fine print of the legislation. This is a payment of $1,500 a fortnight, regardless of how much you were earning prior to the announcement. It's eligible, and your employer would nominate to say that they fit the criteria, where if their turnover is less than $1 billion, their turnover is dropped by 30%. If their turnover was over $1 billion, it's dropped by more than 50%. The JobKeeper payment started on the 30th of March. However, the first payment won't be made to your employer until the 1st of May. So there is a cash flow gap, and we'll talk about that a little later. This payment will be up to 6 months. So the idea is that your employer will receive this money through from the ATO. That will allow them to keep you on the books, to keep you employed, so that when we come out the other side of the crisis, their business can continue with you employed. In addition to the job seeker payment, there's also rental assistance, and this will be assessed alongside your application for the job seeker payment. So it's also available through Centrelink. This varies depending on your position and is a sliding scale. It also varies depending on if you have a partner or if you have kids or dependents. The other announcement that came through from the Queensland Government is the Covid-19 rental grant. This is a one-off payment of 4 weeks' rent at $500 per week. It's paid directly to the owner of the property or the managing agents for the property. To be eligible, you cannot have more than $10,000 in cash and savings. You can provide evidence that you've attempted to negotiate a plan with the lessor or the owner of the property. You've lost your job and have applied to Centrelink for income support, such as the Job Seeker program, and you're waiting for your application with Centrelink to be approved. This is an initiative to bridge the gap between the 30th of March and the 1st of May, where if people have lost their job and don't have the cash flow to see them through that period. The other option if you are looking for further cash inflow, is to make sure all your tax returns are up to date, as there may be possible refunds that you could receive if you lodge any outstanding returns. And finally, if you are an owner of a property, if your tenants are unable to pay the rent, whilst there's a moratorium which prevents tenants from being evicted from the property, there is an arrears process that would be followed. But on completion of that period, once we come out of this, if there is a loss of rent, it could be claimed under your landlord insurance if you have an endorsement for loss of rent. So this means that it could be a cash flow issue, which we'll talk about in a moment, where you may be able to defer mortgage repayments until you can receive this cash in as a replacement or in lieu of the rent that you would normally receive. We're going to look now at the assistance options to reduce your outgoings. So the first one is, as I touched on, mortgage repayments and deferring your mortgage repayments. So this is not a write-off of mortgage repayments. It simply means that the amount that would normally be paid is deferred to a later date. So the interest is still accrued and will add on to your loan further down the track. As announced by the government, and every lender has their own criteria, but you can speak to them about mortgage repayment deferment of up to 6 months. The other option with your lender or with your mortgages is also to consider looking at fixed rates. So fixed rates at the moment have been reduced to all-time lows based on the current RBA rate of 0.25%. So it's another option to also look at reducing your outgoings. Strategically, if you were looking at doing both, it might be worth fixing your interest rates first and then looking at deferring them. As I said, it's not a write-off of interest, it's simply deferring it to a later date. The great news from a couple of days ago was that the lenders have all confirmed that if you do take a mortgage holiday or a deferment, that it won't affect your credit rating going forward. Another option to look at is discussing your situation with your local council about council and water rates. They're looking at waiving interest and penalties for late payment if it comes after the due date. So again, if it's a cash flow issue, that would allow you to defer those payments without incurring unnecessary interest and penalties. With some insurers, life insurance, total and permanent disablement insurance, some policies will allow for a 6-month holiday from paying premiums without this actually affecting the policy and also leaving it in force. So based on individual policies, it's worth seeing whether that's available to you as well. With utility bills, this again, similar to council and water rates, some utility providers also give you time to pay the bill without actually incurring any interest and penalties. Again, just alleviating your cash flow if your cash inflow has been affected. The final assistance option I want to talk about is also accessing your superannuation. As the government has announced, they've allowed for up to $20,000 to be accessed out of your superannuation. $10,000 in this current financial year and another $10,000 in the 2021 financial year. The way you do this is logging into MyGov, go through to the ATO, and you can request that early release through the ATO. Any money that is released to you is tax-free, so there's no additional tax to be paid on release. The eligibility, you need to be unemployed, you're eligible to receive a job seeker, youth allowance, or parenting payment, special benefit, or farm household allowance. On or after the 1st of January this year, you were either made redundant, your working hours reduced by 20%, or you're a sole trader and your business was suspended or reduced its turnover by 20%. There is implications of accessing your superannuation and in these current conditions. Obviously, there's times where you need to just to survive, but there is long-term implications of taking out your superannuation now, as it may affect your balance in retirement. So it's worth getting some financial planning advice on what that implication would be in your own circumstances. Turning to property management specifically and what we're currently doing and what is happening or implications in this space. So firstly, as I mentioned, during this time there is a moratorium. That means that there are no evictions of tenants for 6 months if they are affected by COVID-19. So for tenants, that means you need to evidence that you have been affected by COVID-19 in order for that moratorium to apply to you. Equally, landlords need to understand that it's only those affected, not a blanket moratorium for all tenants. For Social distancing reasons, open homes have also been banned. So any open homes are now only conducted by appointment only to reduce the number of people coming through a property so that social distancing can be effectively monitored. Routine inspections, we initially postponed those. We are now proceeding with doing those via video conference. We'll still go through the property just via video conference with the tenant, requesting them to show us the various areas that we would normally inspect to ensure the property is up to standard, and to look at any maintenance issues the tenant may raise with us. We'll also take a recording of the video conference, make that available to an owner, and we'll also complete our usual routine inspection report and make that available too. Regarding maintenance, only urgent maintenance and maintenance that affects the livability of the property will be conducted during this time. Quick disclaimer, everyone's circumstances are different, so the information that I've contained today was on an information basis, not on an advice base. So if you would like to understand how this applies to you, please reach out to us. Within the team, we've got financial planning, accounting, and tax, mortgage brokers, property experts. So we'd love to actually apply all the information to your circumstances to help you navigate through this difficult time. So just a disclaimer that this was just information only. The other point to note is that the information that's coming to hand is on a daily basis. So what I've included today is as at today's date. There will be further information released as every day goes by, and so we will release more of these updates on a regular basis to reflect that new information that comes to hand. Thank you. And on a final note, just to reiterate my point earlier, we're here to help. Please feel free to contact us so we can actually talk about your circumstance and situation, and help you navigate a strategy through this tough time.